The larger question for this segment is whether a deal of this size between any companies and industries could get done right now. Let's talk about that and deal making in general. Joining us now is Mark Thierfelder. He is co-chair of global law firm Dechert, advised some of the largest private equity buyouts. Longtime friend. Mark, thanks for joining us.
Brian, pleasure to be here with you and Kelly.
I'm not going to put you on the spot about oil and gas and BP, don't worry. But could a deal of that size or even close to it in this environment get done right now?
Look, as your headline said, uncertainty and impact on deal making, right? The uncertainty right now and the volatility that flows from it is certainly good when you're thinking about trading, right, and ability to make money in that sense. But underwriting to M&A and strategic investments, whether financial or strategic buyers, you need an intermediate to long-term view of how your assets are going to deploy and the return on capital that you're going to get. So all this uncertainty is going to make deals very difficult to get done. As each of you know from being long students of the market, right, the first quarter after a new president comes in, even when that's a pro-business, anti-regulatory presidential administration, you often see deal flow really become moribund. And it doesn't start to pick up until you start to see how that first 100 days settles.
Plus, look, oil and gas, when you talk about needing to know the ROI, how do you know the ROI? I mean, this is an industry that's still in transition. You still have major questions about these assets. And I was going to ask if you think that would even go for a premium at this point. Or, I mean, look at some of the take-unders we've seen in the industry lately with the deal environment. Would that potentially be one of them?
Absolutely. Great point. And I think one of the things that's important to remember, though, is even with all this uncertainty that's out there, there are some segments of the economy where there is actual certainty. So I was just with a very senior banker who's advised on a lot of large deals yesterday, and he was talking about that even if you discount the AI power projections by 50%, the driver for M&A and for equity capital market activity in around the power, utilities, certain parts of the energy sector, and the correlated parts of the infrastructure business should be going full steam ahead.
So I think Shell just needs to have an LNG data center angle.
They need to call Dechert. That's what it sounds like. Well, if you're out there. But, well, listen, Calpine.
Better than calling Saul.
That's it. Good reference. But Calpine getting bought for $19 billion by Constellation may be something. But listen, I know you travel all over the country. I've known you for a long time, all over the world. And, you know, we saw Europe struggle for years. The European stock markets have been kind of hot lately. Their borrowing costs are about half ours. Is Europe back? You think Europe's private equity M&A game is going to start to resuscitate?
Yeah, you know, it's a little bit too early to tell. We've certainly had lots of negative growth across Europe in the M&A business. It's been quite slow for a number of years. Whether or not now's the time that that's going to turn, I'm not so sure. I think there are a lot of things, though, long-term trends that are lining up to refocus capital coming back into the U.S. It's still the best consumer, economy that's out there. There's lots of opportunities. So I'm not necessarily sure, notwithstanding the fact that you see a rise in the equity markets over there, that necessarily means that investment dollars and strategic M&A dollars will be directed at Europe as opposed to eventually coming back to the U.S. I think we just need a little bit more stability. There's a tremendous number of drivers that are backing up to create like what could be fairly insatiable demand.
Sorry to jump in. Your data point was in the first 100 days of a new administration. We tend to see people kind of wait and see, right? Is that fair to say?
Totally.
What's going to happen?
Yep.
Fair to say, without being political, this 100 days might be a little more busy. Shall we say?
100 days.
We don't. There was tariffs and there wasn't. There was tariffs. Now it's April 2nd, day of liberation. We don't know if that's going to happen. Are people just kind of sitting back waiting for? They can deal with tariffs.
Correct.
They just need to know.
Incredibly strong point. I was just talking to a number of CEOs. Right. If a tariff comes into effect, you can figure out how to model around that, how to underwrite to it. Where do you allocate your capital? Where do you place your manufacturing? Right, all the different decision points. What you can't underwrite to is constant change or uncertainty or lack of direction about where tariffs may or may not be going. So until we resolve through this point, I think that uncertainty will continue to inhibit M&A demand, other than a few sectors out there that are a little bit, not as directly tied or as impacted by the uncertainty.
Right.